Hey guys, welcome to this video. My name is John Watts. I'm a consumer protection lawyer, and I want to tell you about an experience that a client of mine had recently. And they had a student loan that they've been paying on, totally current, never been behind on it. And they had it down to about, maybe $1,500. And they had an extra $1,500. They thought, hey, I'll just pay this thing off and that'll lower my overall debt. Well, by paying it off, immediately their FICO score went down among the three credit bureaus. I think one was 25, one was 29, and one was 37 points. That was the only change, is they got rid of that installment loan. And so it's like, well, how in the world could this happen? So let's talk about this. And I'll talk specifically about student loan, but then I want the bigger picture of credit scoring and how does this work? So specifically, the reason that the score kind of tanked was that this was the only installment loan. The other debt, when looking at this person's credit report, there was a lot of credit cards and maybe there was a mortgage. I'm not sure about that. But the installment loan was the student loan was the only installment loan. So no car loan, nothing else. And so the way FICO looks at this, I'm going to talk about FICO sort of big picture here in a moment, but FICO looks at sort of the mix of debt that you have. Is it all credit card debt? Do you have a mortgage on there? Do you have a car loan? Do you have student loan? Do you have installment loans? What do you have? And in this particular model that this person was looking at, it just really hammered them to get rid of that installment loan. Now, if they had just continued to pay it, it would have been paid off in 3-4 months, and they would have also had that drop in score. Now, I expect that score will come back, okay, as other debt is paid down. So they take the money that they were spending on the student loan, they put it on the credit card, bring the credit cards down, score will come up. So what's the big picture of this? The big picture is when somebody says, well, what do I do to improve my score? And when I think about that, I want to make sure when I answer that person, it doesn't come across as sarcastic. But it's almost an impossible question to answer. Which score are we talking about? They go, oh, my FICO score. Okay, not my Vantage score, not what Credit Karma gives me, but my true FICO score. I go, great. Well, which FICO score? I go, what do you mean, which FICO score? Like, well, there's FICO score, there's 5 and there's 6 and they have all these different numbers. And they go, oh, I just mean my FICO score. I'm like, well, there's dozens of different FICO scores. Particularly when you consider that you have Equifax, Experian, TransUnion, they're all sort of using FICO scores. And there's a lot of variation. Okay? So what might be really negative for if you're trying to get a mortgage loan and using a particular FICO model that's used for mortgage loans, well, it might not be so bad if you're trying to get a car loan. So let's think about it. Okay, if I'm 30 days late on my car loan, obviously that's negative no matter what. But if I'm trying to get a mortgage, well, which would be more negative? Having a 30-day late on my car loan or a 30-day late on my mortgage loan? Well, if I'm trying to get a mortgage, it's going to be the mortgage loan. Well, if I'm trying to get a car loan, it may be 30 days late on the car loan will be the most negative. Okay? Think about if I'm trying to get a credit card and I've got lates on my credit cards. Okay? So here's the answer to this. Okay, I'll give you a couple of answers. One, if the company that you're going to be applying for a loan uses FICO, and look, they dominate the market. Okay, absolutely dominate the market. Well, then it makes sense to know what your FICO score is. So you may want to sign up for it. And look, this is not an affiliate link or anything like that, excuse me. But I think if you go to myfico.com, I think that's where you can sign up. I don't know what it is, $30, $40 a month, and you can get your actual FICO scores. Okay, so that's one way to look at it. And they have little simulators on there. Again, you need to figure out which FICO scoring model, okay, because they have new models, but there's a tremendous cost to companies like Bank of America, Chase, Capital One, all those companies to upgrade to a new model. So FICO may be this model that they released in 2020, but your lender may be using the one from 2014. Now, even that 2014 one will be modified and upgraded, but still, it's a different model. And so you can, go directly to FICO. Again, I think it's called myfico.com. And I'll put the link in the description, make sure we get that right. Or you can go to, let's say you're dealing with a mortgage broker, and just say to your mortgage broker, say, look, if you've got a good relationship with your mortgage broker, your mortgage professional, say, look, I'm thinking about paying off my Capital One card. Will that help my score? And the broker say yes or no. Typically the answer is yes. You say, well, I'm thinking about paying it off and closing it. Well, your broker may say, whoa, 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 don't do that, because you're going to bring your score down. Okay? You say, well, that doesn't make any sense. Why would I bring my score down? Well, one way that FICO looks at things is what percentage of credit are you using? So let's say you have $30,000 in available credit and you're using $3,000. That's great. That's 10%. Fantastic. Okay? But what if you then, let's say 20,000 of that is Capital One, and you're like, I'm just going to close that out. I think that'll make me look better. Well, now we've only got $10,000 worth of available credit, and you're using 3 of it, so now that's 30%. Okay? And so that may lower your score. So again, talk to your mortgage professional. I mean, a little harder with a car loan. Typically, we don't have that long-standing relationship, but maybe you have a banker that you can talk to. And so if you know who you're going to use, so you have a trusted mortgage professional, then I would get with them long before you actually need the loan. Say, look, here's my credit report. Here's my credit score, at least from FICO. And say, what do you guys use? And for your lenders, what's important? Because you may say, look, I've got 5 medical collection debts on here. I disagree with those debts, or I paid them off as soon as they popped up there. And your mortgage broker may say, look, the model we use, it ignores medical debt, or it ignores paid collection accounts, or it does not ignore that. And that's tremendously damaging to you. So it just makes sense to know the rules. Okay, so let's think about this. I'm recording this, I think it's September 16. So, we're starting back at least with professional football, a little bit of college football. Who knows if that'll last? Hopefully it will, but, I guess time will tell on that. But are there different rules between the NFL and college football? Yeah, different rules. Well, does it matter? Yeah, it matters. You go up, catch the ball, and do you get 1 foot in before you go out of bounds? Or do you get 2 feet in? Well, it matters. Are you in the NFL or college football? You need to know the rules before you start playing the game. Okay? So if you're in playing basketball, you need to know, is there a shot clock? What's the shot clock? Are we in college? Are we in pro? Are we in international? What are we doing here? So same thing here. Talk to that trusted mortgage professional. Find out what are their rules, because it's not only the scoring, it's also underwriting. And you need to get past both of those to get the best loan. So just talk to them. You're like, hey, I'm thinking about paying this off, or I'm thinking about taking out a consolidation loan to pay off all my credit cards. Will that help me or hurt me? Well, talk to the person that's running the numbers. Talk to the person that's got to deal with underwriting to get you that home loan. So that's my suggestion to you. And I wanted to just use a simple illustration of something that maybe doesn't make sense. Hey, I paid off my student loans and my score tanks. How does that work? That's just the way FICO works. And same thing with Vantage. But the bottom line is either figure it out on your own, myfico.com, or go to your trusted professional advisor, mortgage broker, mortgage professional, banker, and say, hey, what will help me? What will hurt me? What do you want to see me do over the next 2, 3, 4, 5, 6 months so that I can be in the best position to get the best possible rate? So I hope that that's helpful to you, and appreciate you watching this video, and I'll catch you guys in the next one. Okay, have a great one. Bye-bye.